Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, July 8th, 2021. And our top story today, New York City's real estate market is making a comeback. Well, joining me now to discuss this and a lot more is Damon Kennard of Douglas Elliman Real Estate. Damon, great to see you. Thanks so much for joining us on the program again this morning.
Absolutely. Thank you for having me.
Yeah, and you know, you're in New York City and you're kind of at, I don't know, ground zero, probably not the right word, but that's kind of the epicenter for a lot of reasons around the pandemic. And I wanted to get your assessment first, before we kind of get into the real estate market. How are things returning to some level of normalcy in the New York City area?
Yeah, absolutely. I mean, there's definitely changes in terms of like how business is conducted, but as far as activity, the economy has definitely rebounded considerably. People are out. The state of emergency has been lifted. So I think we're at 70% vaccination rates. So things are going very well in terms of just the overall New York City activity.
Let's talk about real estate, what you know is near and dear to your heart, and Douglas Elliman, of course. Have you seen a resurgency in the number of real estate deals, apartments, condos, co-ops that are being transacted over the last, several months?
Yeah, absolutely. Not only has the trend of buying activity continued, it actually surged in the last quarter, like an incredible 152% from the previous year. So yeah, definitely a lot of very savvy buyers kind of saw an opportunity to get in there and get the sort of quote unquote COVID discount as it's being called. I wish there was a better term for that, but here we are. And so that has definitely helped fuel this increase in buyer activity.
Yeah, and when you look at a lot of what's interesting around the country, and I want to get your sense for this in New York, is that sellers have a real advantage because people are waiving contingencies. They're really competing and bidding up the price of these homes. And again, this is maybe more suburban than it is urban. But I wanted to get your sense for the market, as you see it with your clientele. Are people waiving contingencies? Are they bidding up the price of these units?
Well, it's not quite that. I wouldn't go that far. There are certainly bidding wars, a huge increase in the amount of bidding wars that have happened, say, like prior to, say, like a year ago. But we're still a long way from, like, say, I would say 7 or 8 years ago when there was like a really huge real estate boom in Manhattan in particular. So no one's really willing to take those level of risks, and no one's really so desperate for a property that they are willing to, waive contingencies and things like that. But there is definitely still activity going on. There's still competition. Sellers in a better position than they were certainly a year ago. I would even say 2 years ago. But it's a measured enthusiasm, I would say.
And that's really good. And in terms of you mentioned the reopening, I would imagine that businesses, I always read about the banks, Wall Street, et cetera, businesses looking to have their employees come back. Are the people that you're interacting with, the firm interacting with, are these people that are maybe outside of New York City? Maybe they're foreign investors, maybe they're people outside just in a different state looking to return. What's your sense for the type of clientele that you're seeing, in terms of who's buying, who's not?
Sure. I'm actually seeing a lot of people who maybe were long-term renters who maybe thought that buying was out of the realm of possibility, or maybe they wanted something, maybe a little more space that they couldn't quite afford. So they were planning to buy maybe 2-3 years down the line, but their opportunity came in now. So it's I'm not necessarily seeing a lot of people not coming from outside of New York, but from my perspective, I'm seeing a lot of activity, just New Yorkers who are really trying to take advantage of the deals that are going on now.
And look, that's smart. I mean, whether it's the COVID discount or distressed asset, really smart
Sure.
to try to advantage yourself given the circumstances. Damon, are a lot of these, you mentioned people who were renting looking to get into an apartment or buy a condo or buy an apartment. In terms of what we've seen around the country, it's been very difficult for so-called first-time buyers to get a line of credit and to compete. Is that a little bit different from your perspective in New York?
Yeah, I think so. I think that interest rates are still near record lows. So there are great opportunities. And because income is actually still pretty high, even for first-time buyers, and a lot of the banks here in New York City kind of understand people's situations are a little different. So they have a little bit more flexibility, and they're willing to kind of invest more in real estate, provide more financing to a wide scope of type of buyers. So they're not really running into those types of obstacles because, as long as they're financially qualified and they have good credit, the bank is going to be pretty flexible and work with them.
Yeah. Well, Damon, I need to take a very quick break, but I want to continue the conversation. We come back, we'll talk more with Damon of Douglas Elliman about real estate and what's happening in the New York City market. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Damon Kennard of Douglas Elliman Real Estate. Damon, thanks for staying with us this morning.
My pleasure.
Yeah, I mean, you're being a real trooper, dealing with my questions, and having known you for like a lot of time, and you're putting up with my antics as usual. Let's talk about mortgage rates. We saw mortgage rates really kind of creep down significantly historically in 2020. Things have started to creep up a little bit. What does that mean for buyers, first-time buyers, people looking to get some level of capital in the form of a loan?
Well, the good news is that even though mortgage rates are starting to creep back up, they are still way off of the all-time high. I think we as the consumers, we might be a little bit spoiled in terms of like where interest rates are. And we look at a 3.5% interest rate and we kind of flip out, and I mean, you can go back like 30 years and you're seeing like 12.5% interest rates. I mean, like something insane to us, but historically we're just nowhere near the all-time highs. So it's still like just an incredible deal. So I think that the buying power is not particularly affected by this creep up in the interest rates. And I would just add to it as well is that they're not rising. So like they're not having meteoric rises. They're steadily coming up. I know that inflation is an issue, but again, I think inflation levels are still like way below anything that would concern the economists. So yeah, I think we're in good shape. I think that the headlines might be a little bit overblown on this, and buyers are still able to get financing and still have really strong spending power.
Yeah, and you and I lived through the 70s, so we can talk, and 80s, so we can talk about high interest rates, and you made an allusion to it. I mean, we're talking double digits. It was significant stagflation, inflation, not a fun time. And I even have my parents, I'm sure yours as well, telling me about mortgage rates being so high. Damon, what does it mean in terms of qualifying for loans? And from my understanding, just in talking to an analyst, is that obviously there's been more scrutiny since 2008 in terms of income levels. Have you seen that continue, or have things kind of eased up a little bit in terms of credit score, income, proof of income, et cetera?
Well, I think it's I think that the consumer is just, particularly in New York City, that the consumer is just a little bit more aware of what the qualifications are, and so they're just making sure that their ducks are a little bit more in a row. We're not really, going into these sort of fast and loose rules of like 2007, 2008. People are really like, they're making sure that they have the not only the down payments, but they also have like some post-closing liquidity in case something goes awry. They're just because people don't actually feel comfortable making that level of an investment without having some sort of backup plan in place. So we're not really running into those type of obstacles. We're making sure that people are qualified ahead of time before we even begin making purchases. And if they aren't qualified, we set up a plan so that they can get there.
Yeah, and I would imagine you're seeing traditional lenders, banks. Are there more what I'll call tech-infused lenders that are getting involved? We read about fintech, financial technology firms, but out of curiosity, are you seeing newer types of lenders kind of enter the market, trying to capture some of this mortgage opportunity?
Yeah, I think so. I think that it's I don't want to give commercials for any particular big names, but some of the more established names, let's say that, some of the more established names, they know how the market works. They know how some of these buildings work, what these buildings are looking for, especially like when a lot of the inventory is comprised of co-ops, and they have somewhat more stringent financing requirements for their purchasers there. So it's a little trickier for some of the newer kids, these tech companies to kind of come in and just navigate some of these issues. They have to be really willing to kind of take on these risks. But they are trying. I mean, they're definitely, they see the opportunity. They want to get in there. I've worked with several clients who have been, they've sort of gone away from some of the more traditional names in favor of some of these other companies, and it's worked out. So, but it's going to take a while for them to really kind of break through in this particular market.
Damon, I should have asked you this at the top of the show, but in terms of the types of properties that are out there, is there one type, whether it's an apartment, a condo, a co-op, that has been kind of like the in flavor of people really wanting to take advantage of that you've seen among your buyers, your clientele?
Certainly, I would say that given this kind of new paradigm that we're dealing with, a lot of people are working from home. So I think in general, people want more square footage to have that flexibility. That's a big selling point. So maybe someone who had a one bedroom, who only needed a one bedroom, they're now looking at two bedrooms and further on up. So it's about scale. It's about size. It's about versatility, because we're not really out of the woods on this, and we don't know what's going to happen, and we don't know if we might end up in another lockdown, or conversely, like even if we're through it, the technology has shown that people can work from home. The technology has shown that you don't need to be in the office 9 to 5 in order to be productive. So so that's changing as well. So people are looking for more space, but they still want to be in the city. These are still customers who don't necessarily need the house in the suburbs and just want to telecommute. They still want to be here and they still want to be in the city. They just want a more flexible space.
Yeah, and they want to be able to get to the subway. They want to get to the parks.
Absolutely.
Damon, you brought up, when we were having our conversation about interest rates, you brought up inflation. Are you seeing, just anecdotally, I'm not going to ask you to quote numbers, are you seeing, people in New York typically who live in the city don't drive. They're usually taking mass transit. So you can kind of eliminate the premium on fuel. But what about prices of food? What about the subway, things like that? Have you seen an elevation there? I mean, you're living there in parts of New York City. So anecdotally, what can you share?
Yeah, honestly, all I can say is that New York has always been expensive, and I can't really imagine anyone even really noticing if the food price of food goes up or the subway goes up. We complain for maybe like a day, and then we just pay it. But the good news is, the great thing about living in New York is because it's so expensive, household incomes tend to be higher. I know. There's this big debate about wages. That's a whole separate interview. But salaries, salaried positions have traditionally in New York City have always been higher than anywhere else in the country, relatively speaking. So, people are accustomed to paying high prices, and I don't think that's really affecting anyone's decision making in terms of investing.
Yeah, and to my point earlier, I mean, if you're taking the subway, not driving, you eliminate that premium that you would have to pay for gas, because we have seen that go up. Damon, it's always a pleasure chatting with you. Really appreciate you spending a few minutes of your time to talk about real estate in New York, and we look forward to having you back on the program again very soon.
Absolutely, my pleasure.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, so until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.